ACC, when they delivered 0.5% margin, I think the street was factoring in that these numbers are going to be rather weak, but the stock is not cracking. A couple of reasons out there, because it's corrected close to around 15% from the recent peak. The other factor in there is now the street is building in that there's going to be cost-saving measures. Remember, from the coming quarter itself, the EBITDA per ton will go up by 55 to around 60 rupees, because that royalty of 1% will go out of the way. Besides that, for the group itself, there'll be a recovery. So for the industry, there'll be a cost saving, but for Ambuja Cements as well as ACC Cements, the street believes that there will be a higher amount of saving, because now volumes will pick up. Now you have a new promoter come in there. There'll be some synergy benefits as well. So that's why the stock is more or less flattish. But otherwise, the numbers are weak. On the top line, it was a little bit better because realizations are likely to be a little better. Volumes bang in line. EBITDA was a 130 crore miss, but margins came in at around 8.5%. Remember, for ACC, they just managed to deliver an operating profit. So these numbers were a miss, but the street is clearly looking ahead, and that's why the stock is down only around 1%. Prakash, wanted your quick comment on the cement space. Are you still going with the old darling, that's Dalmia, that you normally are very fond of, or have you changed your loyalties? Is the big boy Ultratech Cement saying, everyone's disappointing, I'm giving inline set of numbers, and I'm the big daddy?
Good afternoon, Nigel. So, I think Dalmia continues to still offer a lot of salience given its geographical spread and the efficiencies that it comes along with. So I don't see any reason why you need to kind of, start getting away from it. But on the other hand, what's interesting is now that, once the numbers are out, and especially the larger ones, the bigger players have told you that very clearly. The numbers tell you that there is pressure on margins for sure. Even when there has been revenue growth, product mixes like Sri, in the case of Ultratech, it was probably a little bit of expansion that they have been more focused on rather than working on efficiencies in the existing units. All of that has started playing out. So interestingly, when this whole operational consolidation gets done with, which is probably another 2 quarters, and they'll get busy as we get into December and Jan. Then you will probably see the emergence of very clear value within the M&A angle, which people have kind of now stopped talking about after things have settled on Ambuja and ACC. But my sense is Nuvoco is one particular name that you could look at. It gives you great geography. The efficiencies are decent enough. EBITDA is also kind of not so expensive, and the whole idea of buying into a unit for anybody who acquires is that it adds much more value than just pure capacity, and that's one unit that does. So I would be happy if those numbers don't disappoint. It'll probably give you an entry into a new name of sorts. But Ultratech and all, of course, continue to be the backbone of the portfolio for most players who don't want to most investors who don't want to bet on marginally smaller players. But I would definitely stick my neck out with something like Nuvoco at some point in time now.